Good morning. This is Mornings with Michael. Happy Sunday to you. The show is for informational, educational, and entertainment purposes only. Hope your weekend is going well. And now, as you prepare for the week ahead, hope everything turns out and all of your dreams come true for a fabulous weekend. So, let me take a look at our markets, share the screen, see what's been working. First, going to take a look at the round here. This is QQQ. We had some pretty good volume here. The CCI is trending up. We got a cross on the stochastics and MACD. I think I was going to go up maybe Monday and Tuesday, and then we'll just have to see what the rest of the week brings. Take a look at the VIX. The VIX is pulling back to a pretty low complacent level here. I think eventually this is going to turn around and the markets are going to be pulling back. Let's take a look at the S&P 500, which reacts in the opposite manner as the VIX. So as the S&P goes up, the VIX goes down. And we have this resistance up here. We'll just see if it can pull up to this level or if it's going to pull back beforehand. And that number is about in the round of 413, 414. Look at the IWM. All of these charts look about the same. Once again, the CCI has come up quite a bit. To see if this continues on Monday or Tuesday. And the Dow Jones is about the same as well. So let's go see what indexes are trending. So the XOP is heading up. It's now above all of its lines. It just popped above its 200-day line. XLE is fighting to get above its 50-day moving average. It's been above its 200 for a while. And then there's the two leading indexes right now. Metals and mining has really been trending here for a while. Has plenty of good volume. FCX is popped up above all of its moving averages. Had one good day of volume here. And then SC Southern Copper, it seems to be leading the charge. Huge volume on Friday. And then the other one is the building and materials. Trending in a very positive had 1, 2, 3, 4, 5, 6. Looks like 7 or 8 days and pretty heavy buying in this index. Looks like TGLS. Technoglass is leading the charge. Just look at this huge volume. Had like 116% earnings increase. Makes glass and for windows and doors. So Core and Main, which sells underground materials, trending in a positive way as well. Huge volume on Friday. And There was one other DLDR in that sector. Look at that take off. And metals and mining, what has been trending well? Steel Dynamics. Nucor. So that's to take a look at that. Now I'm going to head over to our presentation for today. Not sure what happened last week, but our presentation didn't work out, so we're going to try something new today. This is looking back at the historical facts over the last 60 years, including the inflation of the 1970s. The market has bottomed in October and has gone up 30% over the next 12 months. The S&P 500 in October 22 had a low of 34.91. You have to go back to 1929 to find a recession that took place in the third year of a presidency. Next year will be Biden's third year. So let's go back and take a look at the markets again. So we hit the low around 348.11 in October, and it did come down again. This was in December, but it didn't get close to those lows. So we'll just see if this was the bottom of the bear market or not. I know there are a number of people calling for another 20% decline, but we'll just have to see. So this is our inflation data. As we can see, it peaked in June of last year at 9.1%. It's been coming off ever since. We did have a little bit of a higher inflation than we expected in January. We'll just see what February comes in at. This is our personal consumer expenditures, PCE report that just came out. It's been trending lower as well, although it did pop up quite a bit in January. That's what people were concerned about. And the market last week had a big pullback. So this is the NASDAQ. This is like secondary indicators. You can see the big run up here. And then in January, and then as it came below this line, this is kind of showing that in February where we had the pullback. And short-term overbought, oversold, showing that it was overbought. And then as it pulled back, this is an indicator showing that there's going to be a change coming. Now this is the advanced decline line. End of December, beginning of January, a lot more advancing stocks than losing stocks. And once again, in February, this is where the divergence pulled back. And these are secondary indicators to kind of show you what may be happening in the future. Now, that that were some of the positive indicators. Now let's take a look. Bonds are at their cheapest to stock since the very peak in 2007. So this chart is showing you that 2-year Treasury yield is at its highest level against the S&P 500 dividend. And when the yield is high, the bond prices are low. So they're low, their lowest prices since the very peak of 2007. Bloomberg report is showing that Americans are falling behind their car payments at a higher rate than 2009. So is this going to be part of the market that takes it down instead of housing prices? We'll just have to wait and see. Subprime auto lender folds as more Americans fall behind on their car payments. So I guess we didn't learn a lot in their subprime mortgage bubble in 2007, 2008. Chernobyl 2.0, why the Ohio toxic train derailment is being compared to the 1986 nuclear disaster. Police find an 18-inch pipe bomb found behind Holmesburg Church near the railroad tracks. This is just showing you where the disaster happened, and all of this toxic materials are heading into our rivers. This is a larger map showing all these rivers kind of flow into the mighty Mississippi. This is not a good sign. We have another derailment. We actually had a couple of derailments. There was one in Florida, and there is one in Southeast Michigan with an investigation ongoing. And now ranchers in the heart of California are concerned about hundreds of rail cars full of unknown substances that are out in the heart of agriculture land and the head of the aqueduct for San Francisco. And they were unordered by landowners. Suspicious activity, no one knows why they're there. Ohio fire crews are battling large blaze after an explosion at a metal alloy factory. And we just take a look at all these fires. U.S. egg factory roasts alive 5.3 million chickens in an avian flu culling. A massive fire breaks out at a commercial egg farm near Hokkaido, Minnesota. 100,000 chickens die at a Connecticut egg farm. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 kind of disasters here. Is this a coincidence, or has Russia sent some people over here to do some bad things to the U.S. because of the war? That's to be answered. But that's kind of the yin and yang of our market right now. Some things to keep on the horizon, what could possibly happen. Also, it could possibly, we may have hit a bottom. We'll just have to see. It's really kind of data dependent and how the market reacts to these things. So we'll keep you informed. Hope you continue to have a great Sunday. And hope you spend some good quality time with your family and just be grateful for what you have. You know, America is a great place and we have so much more than many other places around our planet. Be grateful, continue working on your goals, and keep working on your activities so you can continue to rise up. All the best to you, and we'll see you on Monday. This has been Mornings with Michael. You can reach us at 415-828-7997. We are here for educational, informational, and entertainment purposes only. Have a great day.